What tax strategies should you consider before year end? Today I want to talk about 4 things. Number 1 is gifts. Are you using the annual gift tax exclusion to transfer wealth to your kids and grandkids? As you know, you can give $17,000 per person this year or $34,000 as a married couple. So you can transfer a lot of wealth with no tax to you or to your kids. But the thing that you need to know is that the gift has to be completed by year end. And there is a recent tax court case that says the gift is not completed until the check is cashed. So the check needs to be cashed by year end. Number 2 is Roth conversions. Are you going to be in a lower marginal bracket this year than in the future? If you compare those 2 tax brackets, it would make sense if this year's going to be lower to look at doing a Roth conversion, even just a small amount this year, to pay tax on that conversion at a lower rate than in the future and get all the future growth in a tax-free bucket. Number 3 is tax loss harvesting. Do you have any holdings within your portfolio that are at a loss? If you do, you could trigger that loss and you could use that to offset gains in order to rebalance for next year. You can also use $3,000 of loss to offset your income. So you can reduce your taxable income by $3,000. Number 4 is tax gain harvesting. Tax gain harvesting can help you get a free step up in basis. If you have any holdings that have a gain, you can sell that gain, trigger the gain, and pay 0% on that gain if your taxable income is below $89,250 for a joint filer, $44,625 for a single filer. So if your taxable income is going to be below that amount, then you're going to have no tax to pay on the gain. And after you have triggered that gain, you can turn right around and buy that same stock back. Since it's a gain, there is no wash rule. You don't have to wait 30 days on a gain. You can buy it back immediately, and your cost basis is now that amount that you just paid for it. So you get a free step up in basis by using tax gain harvesting. Those are 4 things to think about: gifts, Roth conversions, tax loss harvesting, and tax gain harvesting. One or more of those could make sense for you to improve your situation this year or improve your situation over the long term so that you are on your best path for retirement.